Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those massive corporate filings. You know, the ones that are usually drier than a 2-week-old cracker, but hold some juicy secrets, especially when we're talking about crypto and energy. And this latest report from TeraWulf Incorporated is no exception. It is packed this time. So picture this TeraWulf Incorporated, a company that is all about digital infrastructure and powering it with clean energy. They mine Bitcoin, and they're also getting into high-performance computing, or HPC data centers. This report is their most recent quarterly update, telling us how they're doing. And let me tell you, things are moving fast. Scroll condensed consolidated balance sheets. Scroll, let's dive straight into the numbers. This report shows us their financial health on the 30th of September 2025 compared to the end of 2024. And the first thing that jumps out is their cash. They had a whopping $711 million in cash and equivalents on the 30th of September 2025. That is a huge jump from $274 million just 9 months earlier. Where did all that extra cash come from? We'll get to that. Scroll total liabilities. Scroll now, with all that cash comes some serious liabilities. Their total liabilities shot up to over $2.2 billion by September 2025. That is a massive increase from $543 million at the end of 2024. A big chunk of this is due to their convertible notes, which went from around $487 million to over $1 billion. They're clearly borrowing a lot of money to fuel their expansion. Scroll condensed consolidated statements of operations. Scroll. Now let's look at how much money they're actually making and spending. For the third quarter of 2025, their total revenue was $50.5 million. That is a big leap from $27 million in the same quarter last year. And for the first 9 months of the year, their revenue hit $132.6 million, up from $105 million a year ago. Scroll digital asset revenue. Scroll, most of this revenue, about $43 million in the third quarter, comes from their digital asset business, which is essentially Bitcoin mining. But what is really interesting and a sign of their changing strategy is their new HPC lease revenue. They pulled in $7.2 million from this new business in the third quarter. This HPC leasing segment is becoming a more significant part of their business. Scroll total costs and expenses. Scroll, but making money is one thing, spending it is another. Their total costs and expenses for the third quarter were $75.2 million. That is way more than the $42.7 million they spent last year. And for the 9 months, it is a staggering $232.5 million, up from $129.8 million. A huge part of this increase is driven by a massive change in the fair value of their warrant and derivative liabilities. This number went from zero to a mind-blowing negative $424.6 million in just 9 months as of the 30th of September 2025. This means they're taking a huge paper loss on these financial instruments, which sounds scary, but we'll break down what that actually means. Scroll net losses. Scroll, all of this leads to a pretty substantial net loss. For the third quarter of 2025, their net loss was a whopping $455 million. That's a massive jump from a loss of $22.7 million a year ago. And for the 9 months, their net loss hit $534.8 million compared to a loss of $43.2 million last year. It looks pretty bad on the surface, but we need to understand what is driving these numbers. Scroll loss per common share, basic and diluted. To unscroll, this translates to a loss of $1.13 per S-hair for the third quarter of 2025. That is a big dive from a loss of $0.06 per S-hair a year ago. Scroll balances as of the 30th of September 2025. Scroll, let's look at their balance sheet again. Specifically their stockholders' equity section by the 30th of September 2025. They had total stockholders' equity of $247.3 million. That sounds healthy, but it is a bit down from $244.4 million at the end of 2024. Their increased liabilities are directly impacting their equity position. This is a common pattern for companies that are growing rapidly and taking on debt. Scroll cash flows from operating activities. See Scroll now. Let's talk about cash flow for the 9 months ended the 30th of September 2025. Their operating activities used up $35 million. That is a big change from the $18.3 million they generated from operations in the same period in 2024. They are spending more cash than they're bringing in from their day-to-day business. A sign of aggressive investment. Scroll cash flows from investing activities. Scroll, their investing activities are where a lot of that cash is going. They spent $332.3 million on purchases and deposits for property, plant, and equipment. This is a huge increase from $82.4 million a year ago. They are clearly investing heavily in building out their facilities, especially for that new HPC business. They also spent $21.7 million on acquiring Beowulf Electricity and Data Incorporated, which is a big move to expand their capabilities. Scroll cash flows from financing activity. See Scroll, and how are they paying for all of this? Through financing activities, they brought in a massive $806 million from financing activities in the first 9 months of 2025, compared to just $33.6 million a year prior. The lion's share of this comes from the $975 million they raised from issuing those 2031 convertible notes. They are really leaning on debt to fund their growth. Skronen Gap adjusted EBITDA scroll. Now, the company likes to present something called adjusted EBITDA, which is a way to look at their performance without certain expenses. For the third quarter of 2025, their adjusted EBITDA was about $18.1 million. That looks much better than their net loss. But for the same period in 2024, their adjusted EBITDA was almost $6 million. So while their adjusted earnings are still positive, they've taken a hit. For the 9 months, their adjusted EBITDA is $27.9 million for 2025, down from $57.4 million in 2024. This shows that even when you strip out some of the bigger reported losses, the operational performance isn't as strong as last year. Scroll Digital Assets. Scroll this report also talks about their digital assets, which for them means Bitcoin. They adopted a new accounting rule, making them value their Bitcoin at fair value each reporting period. As of the 30th of September 2025, they held 4 Bitcoin with a fair value of about $492,000. Not exactly a Bitcoin mine empire's worth of holdings, but it is there. Scroll Property, Plant and Equipment. Scroll their property, plant and equipment, which includes their miners and data center infrastructure, is worth a lot. It is valued at $861.7 million as of the 30th of September 2025. That is more than double what it was at the end of 2024, showing a huge investment in their physical assets for both mining and HPC. Scroll Goodwill. Scroll, and speaking of assets, they now have goodwill on their books totaling $55.4 million. This came from their acquisition of TeraWulf's EID, showing they paid more for that business than the fair value of its identifiable net assets. This goodwill reflects the value they see in things like the acquired workforce and potential future synergies. Scroll leases. Scroll their lease situation is also pretty significant. They've got a massive 35-year ground lease on their Lake Mariner campus. And they entered into a really long-term 80-year lease called the Cayuga lease for their new site that includes a bargain purchase option. They also have those new HPC leases that are bringing in revenue starting in 2025. Scroll convertible notes. So Scroll, let's revisit those convertible notes because this is a huge part of their story. They have $500 million in notes due in 2030 and a whopping $1 billion in notes due in 2031. All of this borrowing is a major factor in their financial picture. Scroll convertible senior notes due 2031. Scroll the details on these 2031 notes are pretty wild. They paid off a lot for these, including a massive $100.6 million for capped call transactions, which are essentially options to protect them against dilution. On top of that, they had to bifurcate the conversion feature of these notes and account for it as a derivative liability, which added to their reported losses. Scroll form 10 Q2 Scroll. Okay, so the big picture here is a company in hyper-growth mode. They're aggressively expanding, both in their core Bitcoin mining and in the new HPC leasing business. They're raising a ton of debt and equity to fund this expansion. The reported net losses are massive, but a lot of that is due to non-cash items like changes in the value of warrants, derivatives, and convertible notes, and significant investments in new infrastructure. Scroll selling, general, and administrative expenses. Scroll their selling, general, and administrative expenses are also skyrocketing, increasing by $42.8 million for the 9 months of 2025 compared to the prior year. A big chunk of that is stock-based compensation expense. Scroll net loss. Scroll. So, what is my take on all of this? TeraWulf is making a huge bet on the future of digital infrastructure, particularly in HPC. They're leveraging their expertise in low-cost energy to build massive data centers. Their Bitcoin mining business is still important, but it feels like the HPC segment is their real growth engine. They have a lot of debt, which is a significant risk, but they've also raised a lot of capital, giving them the funds to execute their ambitious plans. The massive reported net losses are definitely a concern for investors. But a lot of it is tied up in the financing of these large future growth projects, not necessarily a sign of operational failure in their core Bitcoin mining. The challenge for them will be to successfully onboard those big HPC clients and generate enough consistent revenue to service their massive debt load and eventually turn a profit. It's a high risk, high reward play. Alright, that is our deep dive into TeraWulf's latest filing. What do you think about their aggressive expansion strategy and the massive debt they've taken on? Let me know your thoughts in the comments below. If you found this breakdown helpful, smash that like button and subscribe for more corporate financial insights. And don't forget to join our Discord community, linked in the description, for more real-time discussions and analysis. Thanks for watching, and I'll see you in the next one.